Okay, Sunday, January 8th, 2017. I'm going to start off, I'm back home. Yay. Um, uh, what would it be, last week or the week prior? I mentioned about giving the stock market 1 week to see if they can pull a rabbit out of the hat. We'll go through the individual indexes. Um, but what I want to do is I want to start off with this FAS. Okay, now what I'm looking for here is just a daily chart, basically a sideways pattern. And we know that if you trade sideways, usually a trend breaks out. Okay, what I'm looking for here is that all this unbalanced volume, there's a washout. Okay, basically how I'm reading it is that there isn't really anybody in there. Okay, so that gives me an idea of those who are bearish the financial market. We don't have any bears per se. Okay, so on this one, when I switch over to, I think it's this chart. Okay, so here is intraday chart, 1 minute chart for 10 periods. Okay, what I'm looking for is here's unbalanced volume again. Okay, and the money flow. All right, on this spike up, move from basically 2040 to 2130, money came in. Okay, so for here on the way down, there wasn't any interest in it whatsoever. Okay, but on this move up, money came in. Okay, so I look at that as that there's underlying buying going on. If FAS clears 2120, FAZ 2120, then I think this thing is it'll swing higher. Okay, since there isn't any bearish sentiment in financials, all those JP Morgans, take a look at JP Morgan, they're all going to come off. Okay, and here's JP Morgan. Basically, what we have going on here is on the pullback, money in that came out of it. Okay, overhead on JP Morgan, overhead resistance would be about 87. And to support this would be about 85.5. And if it loses 85.5, JP Morgan loses 85, probably run down to about 78. Okay, now what I mentioned earlier or last week about everybody piling in the same trade. Okay, the stock market, they say, looks forward 6 months. Okay, so we have all these bodies that ran into JP Morgan. Okay, and take a look at this here. All right, so this is what we have going on. Give it a few extra bars. Okay, so JP Morgan, all right, so we had the move off of the election. Okay, so we had a sharp move up, sideways pause. Okay, this was a shallow pullback, right? Shallow pullback that tells you how bullish it is. Marched on up, now we're working sideways. Okay, the thing here is if you look at unbalanced volume, you have prices that are lower than the previous high, but more bodies are chasing after it. Okay, so like I said before, if it clears, if it loses, we'll say 85 here. Here's 85.5. So 85.5. Loses it, I would look to come back down into this area. And that would also go along with the indexes in that. When I look at the indexes, like SPY and all of that, either they either stalled at a resistance level, like say the Dow. Okay. Okay. So here we have here's the pivot on the SPX, and then it's basically stalled out at R1. The next swing on here would be 23.24 on SPX. Okay. Basically, we had the sideways for multiple months, traded lower, and then went through the other side, retested it. Okay, moved up higher, retested here a little bit deeper. And usually, when you go from a sideways, you need either a springboard or a catapult or a slingshot, whatever you want to call it. Pokes its head through the sideways channel. It usually pokes through the other end, and that's what it did. But it did stall at R1. Okay, I have to still lean with the bulls on here. Like I said before, the angle of ascent is what's, you know, it's a little sharp. Okay, especially say in the Russell and now the NASDAQ and the comp. The unbalanced volume on here on a weekly basis, a lot of bodies are in here. Okay, so what we have what I'm looking at is that we are basically adding on to an already extended move, okay? We saw with what happened in, say, like 2000 and things of that nature. I'm also, like I said, I'm playing this, that this is basically kind of an end game going into a recession where the moves are going to be in the small caps, okay? And that's because of with the stronger dollar. We saw a decent move in the US dollar yen, okay, lower, all right. We also saw a bounce in gold off the dollar, and we're seeing it in, say, wheat and corn, things of that nature, and I'll go through those charts too. But the deal is that now that we've moved, we actually have to show results, and we're going to start having earnings coming in from the last quarter, and they should be affected by the stronger dollar. All right, so we've all basically been waiting for something to happen, and basically we just crept sideways, and now we poked our head up. Now we need to either have confirmation of this whole move after the election, or we're going to start seeing reversals. And since I'm going to say that keep an eye on the banking sector, since the banks and financials, they all moved higher. Now we're going to have, we're shaking the tree on the US dollar, okay? We're seeing a move in gold, so we're beginning to see the little reverberations of the market actually begin to come through. So this week, it basically, it's the whole trend thing. If we do get a continuation higher, you go along with it, but remember that, you know, we're long in the tooth of the whole movement from 08 and 09 up. Okay, so we're also due for more larger correction than just the running correction that we had before. So going forward, looking at these here, like I said, I lean towards the bullish side on here. Okay, on the short term, I'll give it a couple of days and see if we can get any of these to break out. Like here, you can see that the S&P stalled right there. The industrials. The dollar or the Dow Industrials did the same thing, came up, and it's actually banging off of last year's R2. So like I said before, these are logged charts. Okay, usually it's just a nice slow movement up. Okay, then you get your sideways, your breakout retest, but the angle of ascent is so sharp. Okay, which basically means it has to hold this, okay, or you'll end up facing a precipitous decline. You have the bodies are in here, so going forward, you know, basically keep tight stops on there. And then on the composite, the same thing. We had basically the week prior, we had a pullback, which was a retest of the secondary breakout, okay, but we need continuation. If the NASDAQ here, the comp, goes below 54, then it'll definitely be a reversal on here. And then we'll have a correction, or at least a consolidation. Consolidation is 10% and less. Correction runs into your 10 to 20%, and then the quote-unquote bear market is 20% and greater. Okay, like I said, I'm looking at this as that the angle of ascent is very sharp, okay? A lot of bodies are in there, okay? We're not seeing any, there's hardly any bears, and we saw in FAS, okay? So all it is it just takes that one little trickle, and then you have a flood, all right? But the key to, I think, a lot of this for going forward is going to be that U.S. dollar. If the U.S. dollar does get blamed a lot for earnings here, we are getting some pullback in the dollar. There is a lot of money in the dollar on the long side. We're beginning to see some movement in regards to the euro. The yen is important because of the carry trade and metals, all right? So basically the one thing you can watch is the US dollar on here. But I'm basically looking for earnings, and that the US dollar is going to be the scapegoat for any earnings issues that they have from the last quarter. As I'm going through the charts, and I'll go through one on commodities here in a second, it's things like wheat and corn. with the weaker dollar, they can have more future sales and they can lock those in. But there are very few markets that I find that are quote unquote cheap. Okay, where say an example back here in 2011, you can see the unbalanced volume here in the NASDAQ at the lower end. And now here we are at the extreme at the upper end. So we have a lot of bodies that are in here. So, you know, like I said, if things begin to crack, you can just draw horizontal trend lines underneath here, okay? If this begins to crack, you're going to have to hang in there. We'll have months of pullback on here if these things begin to crack. What I'm trying to do is, you know, going forward day to day here, is that it's never a smooth drop down, okay? And you also have a rotation of you know, of the contracts. So we have, you know, March and then June. So what I'm trying to do is to put into play here is you know, when we begin to get closer to the rollover, are we rolling in at the highs, or are we going to end up rolling at a low in that? So it's kind of like if you look back at some of the contracts, you'll have like 2 months up and 1 month down, or 1 month up and 2 months down. And that's what I'm because basically, like I said, we have a lot of call buying. So at best, we should trade sideways to eat up the premium on those calls. We still need to see results. So we have earnings coming in, and remember, they're also going to include November and December in those earnings. Okay, and then it's tough. Okay, last year was pretty easy. Last year, the stars all lined up, and it was a pretty easy deal. Here you have, of course, I know when you're at something that's frothy, just the whole thing is just everybody running into banks. Okay, they're all in there. You're going to need somebody to come back and end up buying on it. All right, and that's where we're at. So it's tough because you don't have that clear sentiment that you had last year, where I raised my hand and said, well, I think gold's going to $1,400, okay? And it was around 1050 at the time, all right? The rest of the herd, they weren't looking for that, right? And so what happens, it happens. Okay, so here we are playing this out again. Everybody runs into the banks. They get real excited because these things, it's like a rocket going off. And then I'll throw in that we have the holidays and things kind of to settle down. Let's take a look here at the bank sector. How about that, Kev? What is it, BNK? BNX, BKX, that's right. Yeah. Okay, so here's the banking sector, right? Okay, here's a bank index. Okay. So banking moves up, spends multiple years sideways, trades lower at the beginning of the year, and pokes through in a flurry, okay? Because you can see that the angle of ascent, they start off at 30 degrees, then it picks up at 90 degrees, and then you have a larger sideways pattern where it failed, it came back in, went lower, and we basically, because we're raising rates, okay, it works for the banks, okay, and all of a sudden we get a stall. All right, so we're getting a digestion. So at bare minimum here, one would expect that we'd either mark some time, okay, which we're doing here. These are weekly, so the bank index for a whole month is basically sideways. We'll kind of chalk that up to, say, the holidays and things of that nature, to give them the benefit of the doubt. All right, and these would be your targets for next year. What I would do though is I would have them in the back of your mind, okay, for targets, but because of how deep, the previous year, if you look at, if it used the 2014, okay, so it uses all the data and makes the pivots. Well, it landed at R2, and it flew through. Here is S1 and S2 came down. These are the pivots for the following year. Okay, basically put a hammer on on S2, traded higher. We traded above S2. So we're basically R extended. Okay, and we had the loss of momentum in the pause. And now we looked at FAS and we find out there's no bears. Up here you have, your stochastics and also MACD. All right. So like I said, I'm looking at this is that everybody's piled into this banking trade, and now it has to show results. And we're going to start having earnings and things of that nature this week. But like I said, if the markets turn, you're going to have to give it some time here. Okay, at bare minimum for the bulls, I'll give it that they at least retest. So this banking sector can go from 92 down to 80, but I would trade it on a short run more off of a daily than a weekly. I use weekly charts because when these things trend, they trend for a while. Markets will trend. We've been trending, in the stock market for years. History in the past has shown that after an X amount of period, that's the end of the story. And like I said, these are logged charts. They're pretty, the angle of ascent is pretty sharp. We're getting a sideways pattern here. If it breaks out higher, then I would trade up here is 94 and then 97. Okay. If it comes back down, we'd start talking about the low 80s. Okay. And then that would affect the stock markets in general too. It's that reaction to a pullback to see. Take oil, for example. What was that, Wednesday? Was that Wednesday last week? Where it traded higher and just a hot knife through butter back down. I think that's what got me back to the $38 call on oil. It tried breaking out, didn't find any takers. It ran out of buyers there and just fell apart. All right, you can chalk it up also to holiday type trade, but look, if computers are making 90% of the trades or 90% of the quotes or 90, if the computers don't care about a holiday, right? Okay, so to me, it's kind of a moot point in regards to holiday trading and stuff. Yes, we did see that there was a decline in volumes in that, but the thing is it still is on the charts. All right, it's still. The price of oil poked its head through there, failed, came back through, and I'm like, okay, this could possibly be the start of a bear flag, And what am I seeing here in regards to the rest of the marketplace? But I guess I could do this here real quick too. Okay, so our premium charts. All right. Gold. Okay, so here we have the gold. All right, so this is on a daily gold. Gold came down. Okay, on balance volume. We got the basically the washout. People gave up on gold, and that was the strong dollar. People piling into the dollar. And what happened a couple days later, once it switched. So it's the same type of psychology there we have in the banking sector. This is your ADX line. This tells you if you're in a trend or not. Okay. And so now what I have going on here is I believe that any type of pullback here on gold will find support in regards, because I think the dollar has a little more to come out of it. Okay, which also gets us back to, if the dollar comes down, equities follow suit, and then do they go and continue to march into longer term debt? Typically January, February, March, it's not robust per se in the economy. It's a new year. It's after the holiday season. Same thing with crops in the ground, things of that, as a whole, things begin to pick up, in the spring. So for gold down in here, around 1168 should find some support in here. This was basically banged off R1. Gold basically banged, and we had a reverse a little bit deeper than I'd like to see. What I'd like to see is actually gold reverse the other direction, say Sunday, Monday. And then this is just the first swing back up to where it broke out in the 1220 area. But like everything else, you have to have the follow through in here, or this is just a continuation of the trend lower, and which would mean that the dollar would be stronger. And then people there'd be a flurry of activity just they're chasing after this. Okay. You know, we still have to see results. You know, sure, we're raising interest rates, but you have to go in and you know, borrow and lend. You know, you still have to go through that process. I'm using the shadow here of this cloud as like a resistance level. Okay. Also, you know, I talked about on a weekly basis that I thought gold could do a C wave. Okay, let's take a look here. All right. So what I have here is I just threw a number up here at 1500. Okay. So on a weekly basis, basically we could have this as an A wave, a B wave lower. You can see that the unbalanced volume, the bodies aren't in there on a weekly. You saw back in here. I talked about this before last year where we had the bodies move into gold and then they quickly ran out of this thing. Then they did it again. They quickly ran out of it and gold turned on them. This is that target area I talked about, you know, 1200, 1220 area, which was here. You know, if gold breaks this point, then I thought we'd be running down much lower. There isn't really anything confirmed. I mean, you could basically say that this is a larger sideways degree play. But what I did is when I went back and looked at history, the rising stock market lifts all boats per se. So you know, you can have a continuation, but you have to have results, right? Or you just end up with a larger degree sideways pattern. A bunch of you did mention GDX and things of that nature. I found what I thought was interesting that the shares, they were holding up a lot better than the metal on our way down from the Italian vote on here. Okay, and then basically everybody kind of gave up on the metal down in here, and then what did we do? We got a bounce. Okay, GDX. Okay, so we have GDX. All right. Stochastics are here. Like I said, the money was holding in here. We didn't get a washout like we did previously in 2015 going into the end of the year. Sideways, we had a bounce. Targets up in here, you have the low 40s. A double top would be in the 30s, low 30s. A lot of volume. You see this volumes area here? It's around 26. Okay, so GDX would have some volume issues around 26. All right. Okay, that's a weekly, daily. Same thing again here. Okay, so we had the washout here, back down towards 18, 19 level. We traded higher. GDX traded higher. Okay, above the previous peaks. Okay, so that's the first sign that that the bulls had captured control short term. When you get to, I think I wrote back to a few of you. I think it was around 24. There's some supply issues up in here, and you can see up in here coming into 26, which would be roughly about half back. Okay, if you go into a 2-hour. Break it down to intraday, you can see that the money came into this here, okay, at the high. We closed, or the latter part of the day, it turned up and money came in on it, okay, so there is money coming in on this. You can see the level up in here around 24 is R2. Okay, support, they're going to need to support here 2150. I wrote down 2100, and let's see here, I need GDX. Okay, here's 23.25. You can see a lot of volume up in here, so that's overhead supply before 24. You can see here this bell curve. Okay, so this should be a support area around 2150. You can see the money coming into this. Okay, so the deal is here is if you want to add, it would probably be around the 2150 area. The bulls are going to have to hold this 21. We'll know, like everything else, within 2 days here. We'll see how this plays out with the US dollar. I did notice that, like everything else across the board, things are beginning to shake both ways. You know, the dollar lost some to the euro, but gained some on the emerging markets type deal. But I'm, like I said, you know, I'm looking at the big picture and the emerging markets, and that even though we're getting a bounce in interest rates right now, okay, all it is it's just a short-term problem, because as we continue to raise rates higher, it forces the rest of the paper and the rest of the world to follow suit too, because you have to compete. America's at 4%, and you know your country needs a little bit more. You're going to have to charge, say, 4.5% or 5%, so that diverts money in the marketplace. You know, I'm looking at, you know, bonds and that's just a bounce. You know, will that pull equities? Well, in theory, right, the money comes out of somewhere to go into something else. But a lot of this, I think, just for right now, is just a bounce with the dollar coming back. But like I said, we'll see within 2 days here. And to see if there's any follow through with the dollar to the downside, which would help gold out. I believe into February, gold has a kind of a seasonal type deal. I think it's October to February. It has a underlying seasonal strength on there. Okay, so like I said, for GDX, the bulls really have to hold the 2150 would be an easy one. You know, here's the bell curve. And then I'd have to say just 21 on this one here. Anything when it follows, if it goes through the upper end here, then it will do 24, 26. And I believe the computer said 28. But like everything else, we'll see it when it gets there to see how this plays out. Most of the folks should be coming back to the marketplace here. We'll see. You know, when you have this hurry up and wait, you know, to me, I look at it as, okay, it's a loss of momentum, but I'll chalk it up, you know, as a seasonal move here with the holidays and that. But, you know, for some of these markets that have turned, you're going to have to see the follow through, or they'll just, all it is just a bounce in their main trend. I also posted charts on that link for the premium here. I posted earnings. I'm back here so I can adjust these. For some of them, like this ACST, okay, the first thing that comes that I see is I say, okay, it has a couple of moves off the low. It's a $1.30 stock. All right. Unbalanced volume. The bodies are in there still. Okay. So for some of you, Utes, those Utes out there, some of you, I don't play this kind of stuff. All right. I kind of, like I said, I prefer the commodities, you know, but it would be tempting to play it from the long side on here. Okay. Basically, it's lost its momentum and it's going sideways. Okay. The only caveat here is that the unbalanced volume on this last spike higher, the bodies are still holding in there. A lot of these stocks that have been moving down for years have a lot of short interest in there, so they would be susceptible to spikiness. Okay, and remember, short covering rallies are short, sharp, and quick. They're it's over with before you can basically react. Okay, it's sharp at the angle of ascent. You've seen, I mean, some of these moves here. I mean, you just wide. You know, you have a dollar stock runs $1. Here's $1.46. You know, basically from 120 to 40. So this thing doubles in a week, kind of deal. So it's that's it. It's over with. You know, with the fuel cell, what I'm going to do is post these. I'll change links so we don't have 10,000 charts to go through, but I'll just mark up what I think for going into earnings. And most of them, you're basically going against the grain. You know, if everybody's long something, then you buy the puts, that kind of deal. Because the deal there with the puts or the calls, depending upon which one it is because they're not going to be offered at a high premium. Like this one here, AYI. Okay, it says it's building materials. I noticed another one was building materials. What you had is it came through, so it should be a springboard the other way, and lo and behold, it only made it about half back and then rolled over. So I'm looking at this one as this is susceptible to another failure into earnings and then roll over. Okay, that's how I'm looking at that. Bank of America, same type of deal where you have a lot of bodies in there and then it stalls. We have earnings coming out here too. We'll see how it plays out. But one would figure that the pain would be to the downside on these banking and financials. And I also have underneath here, I have this is a 10-year yield, and this shows the correlation. So as interest rates higher, okay, the correlation is at 1. Okay, so if equities come off just because of the strong dollar and interest rates go lower, it should, in theory, pull the banks down with it. So a lot of these things are chained together. It's kind of like playing the same game going into 2007. Oh, if oil goes higher, because we're fracking, the stock market should go higher. And you're looking at it going, you're kidding me, right? But that's the same thing. As interest rates go higher, the banks will go higher. So, but like I said, I'm looking for some sort of short-term pullback on here to get rid of some of the frothiness. I wrote about this one and the next one. Bank of South Carolina. It has a run of a year and a half of sideways, moves up a year and a half of sideways, and it gets pulled in with what's going on. The bodies are in here and you're getting a stall. So I talked about, all of a sudden you get these other banks that are, nobodies in the world, and they begin to come off. They could pull the whole sector down because they're going to pull down. If they are in certain indexes, they're going to pull it down. Some others, this one only has 8,200, but it's not a merry ride for everybody. Where was one more on here? This one here. Okay, here's Century Banks. Okay, lower volume, right? So it moved, traded sideways, it gets sucked up into the thing. Okay, so the whole deal here is some of these little ones, they come out and say, hey, it's not as rosy. Well, you could pull down the whole sector. And that's what I'm kind of leaning at right now, is that something comes in from one of these banks that somebody doesn't like it. It starts affecting your banking indexes and stuff begin to falter too. Just because this is supposed to happen. Even if you get shallow, a 1/3 pullback. Okay, the trend is still higher, but you begin to get some of these bodies to get out of this thing. There was nobody in here at 33. Nobody wanted it at 33, but when it doubles, everybody wants it, right? So that's what that's any crack that you have here, it's going to show up in the banks because of the bodies that are in it. Here was one I thought was interesting, was this Delta Airlines, DAL. Okay, you have a large sideways pattern, pokes its head below, and then it shoots higher. Okay, set some alarms under here. What's that? 48.87. Okay, if it loses the swing higher and comes back in, I did a video on OVAS, OVAS, and talked about how I looked at like a topping pattern, and that's comical as always, right? But then what happened with OVAS was it poked its head through, didn't make it, and came back in, and then of course I think it went down to single digits from in the 30s. So the same thing here with Delta Airlines is that it pokes through because, right, we have a large sideways pattern. It pokes through on the low end. It should swing to the other end. It does. It comes through. We have a shallow pullback. We should see some follow through. Any loss under here, it's going to come back into this channel. And it could be that this is actually a top. When you get a sideways pattern at the upper end, it's either a pause before heading higher or it's distribution before it rolls over. Okay. A lot of bodies are in there. Go back to the first page here real quick. Okay, so we had the frothy call buying here. Okay. Basically, the market went sideways, dipped just a little bit. We're working on trying to get out of there. We did get some call buying here. Excuse me, we did get some put buying down here at the low. Okay, and so what happened is they went and popped it the other way. So now what I'm looking for is that we get some sort of frothy call buying coming back in here too on new highs. You know, once it's the whole reactionary thing. They're buying, it dips and they buy the puts. It moves higher and they buy the calls, and we just basically whip them back and forth all day long. All right, industrials here. This is the happy place at 19,895. Okay, if it comes back through, I'm going to have to say that that's it for now. This is a 3-minute chart on SPX, and I have on-balance volume up above. You do have a larger degree sideways pattern. It poked its head through. It's basically retesting. What we need to do is we need to see follow-through on equities for Sunday, Monday. I have a trailing stop here on SPX at 2243. Basically, all it is you have your sideways, you broke out, you paused, you broke out again, you came back and paused, and now you're swinging higher. All you're doing is trailing it underneath here. RSI, if the SPX pokes its head through and comes back, you're going to begin to get divergence on here, okay, on the RSI. Oil, okay, so we had the move where it went through 55 and a quarter, came back to 52, and now I'm treating this as somewhat of a bear flag, okay. You can see that more bodies moved into this on this bounce, okay, so they're actually buying this here. So the stall would be as if oil loses 52, one would assume that this was a failed breakout, okay. 52, and then you're going to come back down into the meaty area about 47. Okay, but if you fail to break out and hold it, now you could be working your way towards 38. But I'm treating this as this is what got me started, was just the degree of how quickly this just fell apart. You know, oh, we're breaking out, and then it loses everything and then comes back in. More bodies move into oil, but if she rolls over, you know, oil rolls over, then all these bodies have to come out. It'll come back in, and the area would be around 47. There is a larger bar at 45, but then you can see how, you know, you can see how close you are to 38 on here. Okay, down here, OVX. Okay, this is your volatility index for oil. This is a daily, so I have this on a daily for the April contract. Okay, if the volatility picks up, okay, this goes back to May, volatility picks up, oil comes down, right? Here's the volatility. Well, we're trading below it. So oil is susceptible to pullback, just going off of the VIX on here. Just like our other VIX, you know, stocks are susceptible to a pullback. And of course, it comes down to how big of a pullback on here. Same type of deal again here too. Pokes its head through, attempts to try again, can't hold it. You know, here's 54. You can set an alarm for this on a weekly. 54 on your April contract. I mentioned 52. You know, ding, you hit 54, warning sign. 52 again, ding, and then back down into this area. But of course, like everything else, it takes some time. These are weeklies. Here is your oil, your VIX for your oil, OVX. And you can see that you're down below here. So it is susceptible. Just looking back at this, that oil could be susceptible to a rollover here. All right. And let's see, I think that's it because the rest of them are earnings. I guess I can run through them real quick. CUDA, I'll kind of pass on that one though. It does look like it can swing higher on here. This is more of a corrective pattern. Elliott Wavers, this isn't a clear 5-way. This is more like an ABC and, you know, an ABC pattern again here. Weekly, yeah, weekly. We did go through this one. Okay. Delta Airlines. Yeah. This is on the daily, right? Yeah, okay. All right. Sideways. All right. Here I have TMF and SPXL. All right. TMF is a 20-year bull 3 times, and this S&P bull. Okay. So now what you see is you're getting a kind of a hook on here. Okay. That's telling me that debt is outproducing or outperforming the short side of equities. Okay. So this is telling me that the people are willing to go into debt and not hold equities. Okay, they're pushing the debt market. Okay, higher. I think they're kind of hiding out to see how things will pan out here after Inauguration Day. The market, I mean, coming back from the summer highs when we made the lows in debt, it's rolled off of it. So I kind of look at this as more as corrective in nature, because eventually we'll continue to advance interest rates until things begin to wane a little bit in the economy. So they have a reason why they can lower rates. This one here, DRWI earnings, kind of a decent setup here, that this is a low at the beginning of the year. Just a larger triangle, but we're talking it's a $2 stock, 275. I did have, like I said, this is weekly, right? Yeah, so this is a 1 week move and then it's over with. If it does swing again, one would assume that it would, if it does go higher, it should go through the pivot this time. But it'll be, I believe it'll be spiky like these here. That's DRWI. Education, especially retailers, cyclicals, bear flag on here is how I'm leaning. There isn't a lot of unbalanced volume on here. So it may, here's pivot up to $11 from 10. That's where it may stall out, but I'm treating this one as somewhat of a bear flag for right now. The lighter ones I'm not interested in. There's only a few of the earnings. You can see here the bodies have jumped into this thing. Telecom equipment again. Fastenal. This is usually, this one gets played short. This one will show up every once in a while in like the top 10, top 20 for large shorts. It's industrial supplier. So parts and pieces, nuts and bolts, whatever. Kind of like AutoZone in that, where you're fixing stuff and building stuff, and all of a sudden that begins to slack off. You don't need, you're not having as much stuff that needs to be fixed or built or whatever. But you can see that it ran into a problem here over previous resistance levels. Same thing with the banks, all of a sudden 28.5, and then you're at 26. A lot of bodies are in there for unbalanced volume. It's a thin one though. FBMS. Fuel cell, okay. I'll use $1.92 as a support area on here. This would be 3s would be the next target, up around the 3 area, but it has to clear this 216 first. If it's 216, then 234, 252, and then overhead supply probably around the round number of 3. And if it clears that, then 66 and 72. It has a lot of, it's been trading lower. Here, let's take a look at the pattern here. Okay, so 2014, it's a $56 stock. 1 year down, 2 years down, 3 years down, it slides, and then it kind of did the old hammer thing and did a reversal at 2. So I said, well, try and use this cloud as resistance area, but you're gonna 225, 270, even half back. But they're, like I said, there are not a lot of bodies in there. This has been basically a hard slide. It used to be popular. FNH, same thing. It's First Horizons, National Corp, same thing with banking. Hard, sharp run, and then a sideways pattern, and the bodies are in here. So these banks are susceptible. Just draw a trend line underneath, and you could see what comes down into this area. But that's the same thing with bulls. if you want to, if you want to own this thing, put it in an 18, or that the machines are going to be at pivot, right? So you put a few pennies into it if you want to get in on it on these banks. This one I put up here, Republic. Oh, this was the other one, Republic Bank of San Francisco. It basically, look at the Harami cross. Okay, basically it's moved higher, then stalled. Okay, a lot of bodies are in here. So a lot of, like I said, a lot of these banking and things of that nature, the bodies are already in. They're up to the shakeout. And we talked about GDX too, that they need to hold this 2150 area. GDX here. Okay, so the point and figure. All right. So it had its low. It had a decent pullback here. It was repelled from these lows, traded up to basically the downtrend line. Okay, poked its head and came back, treating this as a retest. Here's 2108. That's going to be, like I mentioned, 2150. There's 2108 is basically where the volume's at. Okay, the bell curve is where you're going to be aiming for. Like I said, 26 area. It's going to have some overhead supply. And then the computer says 28 up in here. I look at it, but I go, well, that's a pretty good number. That's actually using the pattern that's already developed. Okay. But the only headache would be this 26 area for volume that it'd have to get through to move on to 28. And GDX on a monthly, okay, blah, blah, blah. You get your run from the beginning of the year. We get our pullback, we get a cross, we get a weekly. Like I said, it needs to hold just your trend lines across here on the monthly. It needs to hold this to continue on higher. Like I said, if we get an ABC wave, it may see for 2017, it may see this, 41 area? 40.99, we'll call it 41. Okay, that would be a swing. That would be the end of this area again. You're getting a hook here with the stochastics. But it all comes down to time. This was the XAU chart that I showed with the swing on here. This is basically the same type of move. Saudi Arabia floods the market with oil, gold takes off, comes back down. All right, trades sideways for about a year, then you get a swing. Okay, and if I go over to here, same type of deal where we get the first move over here. Is there a swing into this area? But like I said, I'm treating it as just a bounce in a downtrend. Here was the move. Okay, so here was the move: 85, 86, 87. Gold went up 80%. Okay, while it was still in its basically a sideways pattern here. Logged charts 253 for the low. That story is on an AM radio I picked up. They listed the high, low, and close of gold, and it was 30 cents. And I'm like, that's what the spread is. That's how boring gold got at the bottom. Its daily range was the spread. That was it. It was just okay. And we took off with the secular bull market, all right, and we're coming off of it. And I like I said, I won't stretch it that far. What is pivot on here? It lists 17, but we're talking, remember, they're giving me pivots for the whole decade at a time here. What's this? This is that 14. This was my target originally, was 14. Coming off of this low down in here. But like I said, we shall see going forward. And now that I'm home, yay! Global payments, fade area. I wouldn't mind shorting up into this area here to see if it holds. Same type of deal with, it's financials in that. It pokes its head through, fails, and comes back. Hawk, cross over here in the stochastics. Bank holding company. Weekly. This just looks like a bounce for a headed and lower. Consumer finance. Here's one. HCSG. It's a healthcare. Okay. Tries to go higher. Okay. Makes a higher high above here, but then rolls over. Okay. It's going to have to hold this 36, 37 area. Okay. We'll just, or the longer trend, it stopped going up and it's rolling over, but it's the collateral damage to other healthcare providers here. Same thing here. These are logged charts. They're just supposed to be nice, quiet, but just the angle of ascent is just, and the bodies are in there. They can fall victim to just themselves. And before you know it, there's they're out 10, 12, 15% in no time. The bodies are coming out of this infy. I'll trade it as at best as a sideways pattern, but it does look like, it poked its head through, came back in, tried again, didn't do it, and it came through the other end. So it looks like it wants to roll over. Computer services, pharmaceuticals. This is a cheapie, but it does look like somewhat of a triangle on here. Bodies are in there though, so they're going to try and push this thing higher into earnings. Then JP Morgan, possible, what do we have here? Double top action going on. But I'm treating this one as a short term, as a flag before headed lower. Just due to the fact that there's just too many bodies in there. You run up, and then you stall. And it could be anything, right? Remember, 95% of the world's overseas. You could have JP Morgan have an issue and some foreign land and cause issues because it all reverberates. They're finding all these. Oh, I found this one. Kind of crazy, huh? 50 cents, 50 cents, 50 cents, 50 cents, and they can't even muster 1,000 shares. Home builders. I noticed lumber had turned and kind of possibly swinging up through the upper end here. We know that we're in the home building phase here for the next 6-7 years. One recession. But I would buy banks and homes and stuff on any weakness. Crude oil. Now this goes back to this period here. This is the Gulf War. But crude oil basically dropped down to 10 bucks, went up 128%. I wrote it here 118%. Okay, so that was that. The following year, it dropped 46%. So that's, 46% would put oil around 30 if we match the same play. And then, of course, we get a war. And we did have a recession in here too. 1987 was the peak in the stock market, or real estate, and high in the stock market. And then 1991, we went into a recession. But I was just comparing notes here. After Saudi Arabia flooded the market, oil went up 128%. Here, flooded the market, it went up 118 approximately. But then the following year, fell 46%. So roughly, just guessing, same type of deal. We're down to 30. Can oil go to 15? Well, at 26, it sure didn't sound like much, right? Now we're up to here. Can oil fall that much? Well, we will see. It's just a matter of time. Will we go back to this meaty area again in here where oil can sit around at 25 for an extended period of time? What happens if China falls apart? That kind of thing. Food staples. A lot of bodies in here too. LMNR. A lot of bodies. Not much data on there. It looks like a reversal. Lamb Western Holdings, food products. MLNK. I believe this one gets some play. Global Solutions. Not a lot of bodies were in it before it took off here, so I'm sure then that they can still pile into this. But we're back to business services again, where some of them are rolling over, and like this one is finding some interest. Industrial suppliers, MSM. Bodies are in there. A lot of these that like this, we need to either mark some time or ease this off and put a little fear into the marketplace for earnings here. This one, cyclical recreation services. Okay, this one is, treat this as like a flag. NEPT, $1 stock, but there are no bodies in there. So this would be one that could be, folks can come in here and move this thing behind the scenes. NEPT. Specialty chemicals, sideways pattern. Sideways, you're going to get, it's either going to break out. Gut says it'll probably break out to the upside on here. NTIC. Only know 21,000 on the volume. Thin. Ozark. Double top here, but I think it'll probably flag out. Have a weekly cross here. And the cues, belly of the beast is, we'll just say 2050 actually here. Staples soft drinks. Reed, looks like a flag here. Maybe Coca-Cola or Pepsi will find some interest there. Chocolate Factory, a little too thin. Saratoga Savings, same thing. Bodies are into this thing. Where's the secondary people to bid it up? That's what I'd really like to see, is some of these come off, and then folks actually come back into them. Shaw Communications, same thing. They're adding to it. Sky, this one's breaking down. Home construction. So you can see how the people got into this thing on the spike up, and then just boom, boom, boom. A few weeks later, it's off $3. All right. Computer hardware. This looks like a bear flag, TAYD. Building materials, a bear flag. TSM. All right, this looks like a flag here. This looks like more distribution here. This one looks like it wants to roll over. Kind of like what it did here. Same thing. One day you're at 24, a few months later, you're at 16. Same type of pattern. I'll send this one to you guys. Save as TSM. Marriott, possible double top here. Bodies are in it. So it moves from 90 to 45. Yeah. hotels. Yeah, new high, and it just comes back down. High of trades higher here, but less unbalanced volume, so less money was willing to commit to this. So this one, VAC, looks like a short. SMH, all right, so here I'm treating this as a reversal up in here. Made a lower low. If there's follow through here, then the target would be 64 on the semiconductors. And see, now people were running into the semis too. See, the bodies are in it. $64. Fox. Remember talking about it. I don't know where. That looks like a flag before swinging higher here. They jumped out of this one quickly too on the first pullback. WD 40. Okay. Possibility here of that this is a distribution. Wells Fargo, treat this like a flag that it's broke out above and retest. Not as many bodies, but then again, you know, they had their issues. They just couldn't be proper bankers. Oh no, Kev, they were doing exactly. Specialty retailers, just not. That's a reversal on this one. Yeah. This one's susceptible to the downside here. Why not? And that's the end of that. All right. So now that I've kind of warmed up, sorry that there's not a lot here. It's basically, it comes down to a few things. The dollar and banks, basically, and then your highs on your indexes. We're kind of narrowing the spectrum on here. Where's my NYA? Take a look at this one here real quick. All right. So the bear flag didn't last very long. So now we're working on a top again here too. All right. Okay. Time to go through the futures.